starting the session.
Recording in progress.
All right. Good evening, everyone. Welcome to the Tax Resolution Help Center. My name is May. I'll be hosting today's session and introducing you today's speaker. I will be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do-it-yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. To better understand also what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is Get QuickBooks Ready for Tax Filing. The tax expert for today's session is Adam Neely. Adam is an enrolled agent and works as a tax analyst programmer for Intuit, which owns TurboTax and QuickBooks. He is a true expert in QuickBooks and can help you get your financial statements ready for tax preparation. With that said, introducing Adam Neely.
Hello there, everybody. Um, Thanks for watching, and I hope that the next 15-20 minutes can give everybody a little bit of help and a few tips on how to get your QuickBooks organized. And if you are not a QuickBooks user, might give you a little introduction into how QuickBooks can help you organize yourself for tax time. Um, I myself have cleaned up dozens and dozens of clients' books, and I do bookkeeping for my own clients on QuickBooks Online. I do my own bookkeeping on QuickBooks Online, and I've prepared hundreds of tax returns. So I know what to do, and I also help to program the TurboTax business software that Intuit offers. So got a good grasp of QuickBooks and business tax, and I'd like to just guide you through about 15-20 minutes of tips here. So the first thing I wanted to touch on is just before you start sending things off to your accountant or trying to do your taxes, you want to make sure that your company settings are set up the way that they need to be for your particular tax entity. I'd like during this presentation to just kind of go through some live demonstrations with a sample company in QuickBooks. So I will share my screen now and we'll start doing that. So here's QuickBooks' favorite sample company called Craig's Design and Landscaping. And so the first place in QuickBooks I want to take a look at is your company settings. Your settings are going to be under this little gear guy at the top right, and it's just under your company accountant settings. It's maybe something you haven't taken a look at in a while, so it's good to just verify all of this before you start exporting information or sharing information that will impact your tax returns and your filings. So obviously, company name and legal name need to be in there, and this sample company doesn't have one, but you're going to want to verify that your EIN is correct. This is something I've seen many times, that people come wanting to get their QuickBooks ready for taxes, and their tax form specifies not sure or other or none. So this is one area that we really want to focus on and make sure that your tax return that you file is selected correctly here, because that's going to inform QuickBooks on all the reports it prints out and all of the categories it gives you and things like that. And all the reminders and things it gives you about tax time are going to be based on what you select here. So it becomes a little bit complicated if you're an LLC, because an LLC could be many of these things. But in general, if your business is an S corporation, you have an 1120S. If you're a C corporation, you file a Form 1120. If you're a general partnership or an LLP, you file Form 1065. LLCs, you're going to want to go back to your prior year tax return and see what it was if you're not sure. Or if it's your first time, you're going to want to talk to your accountant or whoever helped you set up your business entity, so that you can know whether you have an S election. LLCs can file taxes as an S corporation. LLCs can file taxes as a corporation, and LLCs, if you're the only owner, can also file as a sole proprietor, and 1040 is your individual tax return. The other option is if none of those apply, then you file Form 1065 as an LLC. So just for purposes here, we'll just select 1120S and we'll save. And we also want to make sure that your industry is set up correctly. And, oh, excuse me, I got out of there. Shouldn't have done that. A couple other settings to take a look at. If we go to advanced, once you select that tax, you'll see that the tax form is selected for you here. You can change it, and that's kind of based on what I was telling you before, like a corporation that is filing S, or an LLC that's filing S. You can make an additional selection here in the advanced tab. But I want to focus on this first tab here. If you have a fiscal year, you want to make sure that's set up properly, that the first month of your fiscal year is set up. And you want to make sure that if you do your books on a fiscal year, but you file taxes on a calendar year, which I've seen before, you want to also change this first month of your income tax year to be January. That's typically applicable to LLCs who are filing on their 1040 as sole proprietors. So make sure your tax year is set up properly. Make sure your accounting method is set up based on what you actually do. So if you keep track of accounts receivable, accounts payable, things like that, then you're on an accrual basis. You also report this on your taxes. So if you're not sure what was reported last year, go look at the main form of your tax return from the prior year, and you'll see whether you're an accrual or a cash business. So you're just going to want to review all that and make sure that all that stuff reflects the what's accurate for your business. So just kind of a summary: make sure your tax year is correct, make sure your entity type is set up correctly in QuickBooks, the appropriate tax return type for your entity, and whether you're cash or accrual basis. This is just a little guide on all the different types of tax returns that you could file, and the different types of entities that file those returns. A couple I didn't mention: estates and trusts file Form 1041. And there is also nonprofit, which files 990, but I wouldn't really recommend those who have nonprofits to be putting their business through QuickBooks because it's not really set up to do it. Okay, so the next thing I want to talk about is categorizing all your transactions. If you come into your QuickBooks and you're similar to Craig's Landscaping, and you see, you click the banking tab, and you see your guys here, and you have numbers here. That means that you have outstanding transactions that have not been reviewed. Another good hint is that your balance from your bank and your balance in QuickBooks don't agree. All of the transactions you have not entered into your books yet are going to be down here. It's maybe overly basic, but basically what this is like a holding pattern for transactions before they make it into your books. So if you have put transactions in your books a different way, then QuickBooks might find a match. If you don't have a transaction in your books that corresponds to that banking transaction, then QuickBooks is not going to find a match like these top 4 or 5 here. You want to make sure before you do anything else with your books that all of the transactions that have come in from your bank have been accounted for. It's going to make your life a lot easier when we talk about reconciliation and things like that, which is coming up soon. So a couple of things that happen with categorizing transactions that I've seen. Tricky transactions, excluded transactions, loan payments can be difficult, and payroll transactions can cause people problems. So what do I mean by tricky transactions? So cash deposits. If you go to the ATM and you deposit even a handful of checks, you might get a transaction in your bank feed that looks kind of like this: $1,200. QuickBooks doesn't know what to do with it, and you might have a description that comes in from the bank, something like mobile deposit or counter deposit, something like that. That can be tricky, and you want to make sure that you are matching this to the transactions that you are depositing. So say you made $1,200 worth of sales, but it's 3 different sales. You want to make sure that this can be split and you want to make sure that, say 200 of it was a reimbursement for something and 1,000 was sales. You can do that here, and you can make sure that you split it up into the different things that it is, because what's going to end up happening is, especially with cash deposits, a lot of people are tempted to just categorize them as income and say, oh, this was sales. Let's see what Craig's Landscaping has: design income. Oh, that was design income. But where you go wrong is that your sales receipts have already booked that $1,200 as design income. So you want to be really careful about that and make sure that you are that you're doing that properly. And I'm going to kind of go through the deposit process to show you how that might work too. Okay, so that's cash deposits. Checks. Something that happens frequently too, especially if you're the type of business owner that gets a bit behind in categorizing your transactions. You might get a transaction from months and months ago, say $24.38 out. And let's say that this didn't say Hicks Hardware, it just said check 24. And you're like, well, I don't keep a check register and I have no idea what this is and I don't remember. One good way to take a look at that is to, number one, try to keep a check register. Number two, you can take pictures of your checks if you have the QuickBooks app. You can take pictures of the check before you pay it to someone and just put it in QuickBooks. QuickBooks won't really know what to do with it, but at least it'll be there. And you can, and then you can refer back to it and see it there. The other thing you can do very often is your online banking will have check images from your bank that you can download and just look back at the check and say, what was that? Those are kind of helpful ways to figure out checks. Okay, credit card payments. So many people have their checking account and their credit card both linked to QuickBooks. They pay their credit card bill out of their checking account, and we end up with double booked transactions. Um, so let's pretend we only have one kind of money in transaction here on this credit card. Let's pretend this doesn't say Amazon and it says something like payment, online payment, thank you. Um, what many people are tempted to do is record as a transfer from their checking account. What that does is creates a transaction on your checking account, which if you then do not match on the checking account, you'll end up with a double transaction when you categorize the one on the other side. So what I suggest doing is getting a workflow where you record one side of your credit card payments, either the payment side or the credit card side, whichever one you want to do. And then QuickBooks will be able to much more easily pick up that transaction when you go over to your checking account and you have the corresponding $89.99 coming out of your checking account. If you've already booked it as a credit card payment in MasterCard, it'll automatically tell you, oh, it's similar to saying I found a match, but it says it's linked to another transaction, and then you just add it and it goes in your books as one transaction. So those are kind of a number of tricky transactions. Excluded is something else I see people do that aren't sure what to do with certain transactions, or they're like, well, this is already in my books, I don't know what to do. It ends up in this excluded. When I get a set of books that has excluded transactions, that's not ready for taxes yet. So we need to make sure that unless there was some kind of technological mistake or some transactions were uploaded that didn't belong, or you have a very commingled account with like personal transactions and business transactions, something like that. Unless those are the case, and even with the personal transactions, I wouldn't suggest using excluded. I would suggest using this as sparingly as possible and getting these transactions into your books and figuring out what books transactions they need to be matched to in order to get your books cleaned. Loan payments can be a little tricky too, because loan payments generally need to be split. So if you have a payment on a truck or a piece of equipment that you're paying monthly, a portion of that payment goes to principal and a portion of that payment goes to interest. That'll be on your statement. And as they come through in your categorization, let's say that this $800 is a loan payment. As they come through, you can book the payment against a liability account. And now it decided not to work, which it always does in live in live demos. But you can book the payment against a liability account, the portion of it that is principal, and then you can book the portion of it that is interest toward an interest account. And that way you don't have your reports all incorrect as you're moving along. Like your balance due on your many people might notice that, like, I've recorded my car payment against my car loan for 6 months, and now the balance due on my balance sheet doesn't match what I know I have left due on the car. Well, that's because the interest is reducing the balance on the balance sheet account too quickly. So split loan payments at all times. And that'll keep your reports accurate for longer. Payroll transactions, be really careful with payroll. Portions of payroll go toward expenses. Some portions of payroll go against liability accounts. I really recommend, if you have QuickBooks, to use QuickBooks Payroll. Very difficult sometimes to integrate another payroll system. So those are just some transactions to look for. I kind of mentioned large purchases and asset accounts, but one thing you're going to want to make sure you do is, as you're going through your categorizing your transactions and going through your books, look for transactions that are greater than $2,500. Expense transactions that are greater than $2,500. In general, if you bought one thing with that greater than $2,500, it needs to be booked to an asset as an asset rather than as an expense. So rather than the expense transaction increasing your expense account on your profit and loss statement, it's going to increase an asset account on your balance sheet. So an example of that would be, I bought something for $1,200. That's not $2,500, but let's pretend that it is. And I don't have an account. Let's say it's a new copy machine. I don't have an account for that yet. So we add an account, we add fixed assets, and we find the category that most matches what we're talking about. Let's say machinery and equipment, or maybe there's one for computers. Yes, copiers. So let's say we bought a new copier. You can put a description in, and the original cost is going to be, you don't want, if you have a transaction for that, you don't want to enter this. So you would save this, and then we would book this $1,200 to your fixed asset copier account. That's going to be a good start for your accountant. At least you won't have to go through and find all of your transactions that were greater than $2,500 when he's doing your taxes. He or she's doing your taxes. You also want to keep note of anything that you sold that was an asset. One thing I always recommend is when you do sell an asset, just book the whatever you got for it to the asset account, even if it makes the asset account negative, because your accountant will see that and know that something happened, and you can point out to your accountant, hey, I sold this motorcycle or whatever is part of my business. I sold this trailer, and I got more for it than what was in the books. So, I mean, it says negative $8,000 in the books or whatever. Your accountant will give you the journal entries to fix that, but that'll be a really good tip off to the accountant that something happened and it needs to be dealt with in a different way than just expenses. And then if you sold something that you weren't previously booking as an asset, I would even then create an asset with a zero balance and put the sale as negative so that your accountant can deal with it. Okay, so reconciling, another big thing you need to do before any accountant would ever want to look at your taxes, they want reconciled accounts. So reconciling in QuickBooks is a little bit tricky. So I have written down, let's see, if we go to the bank register for the checking account and we want to reconcile the checking account. Let's say we're reconciling it to the end of the year, the end of last year. I happen to know that when I look at my bank statement ending on 12/31, it's $41.79.36. So what we're looking for in QuickBooks, I've got no transactions. Oh, that's because I put 2021. There we go. Okay, so what we're looking for in QuickBooks is we want to be able to select all of these and get a zero. And then you can finish that reconciliation, close out that period, go to the next statement period. Reasons why you wouldn't get a zero. One big reason would be that you didn't finish the categorization we talked about at the beginning. Another reason would be, let's take a look at like this $55 check right here. This is a kind of applicable example of what I talked about with checks. So if we go into the banking again, and you'll see that this business owner manually added a check for $55. And that's check 12. They paid the check out of QuickBooks, $55. But now there's a transaction in the bank feed too. If we didn't match this and instead categorized it as an expense, let's say accounting, something like that, and we put that in the books, when we go to reconcile, we'll refresh here. When we go to reconcile, we have a $55 difference when we select all the transactions. And that's because you see we have two matching transactions here. So that's one big tip off, that you've got two things that should be matched instead of having been added separately in the bank feed. So this is even just going through the reconciliation process can give you a good tip off onto where your accounts are wrong in QuickBooks. Very good. The goal of reconciliation: accurate books and accurate tax returns. We all want that. Accounts that are really important to reconcile: any bank account, any loan account, and any credit card account. One temptation that I really suggest you do not use: you are able to force and create an adjustment in your books and it will book a transaction to a reconciliation adjustments account that'll show up on your books and your tax accountant will ask you about. I really recommend not doing that unless it's like 1 or 2 cents that you can't figure out a reason for. If you've got extra transactions and things like that, you gotta sort it out. Good news too is that QuickBooks is very good at, you see, you have all these links, help me find the problem. A lot of resources try to help you reconcile your accounts. So yeah, just like I talked about, transactions are duplicated in your books, and that is what causes the most common reconciliation problems. So that's pretty much it. Those are a few tips, to just kind of basic tips to things to look out for. So I went over a little over 20 minutes, but hopefully it was helpful. And if there are any questions, I'd be happy to answer anything.
All right. Well, thank you for that, Adam. So we do have a question here from our live audience, from Theo. The question is, what is the best way to include car mileage in my QuickBooks, or should I just send the mileage totals to my tax preparer?
It's a great question, Theo. So I would suggest, if you've got a tax preparer that's a CPA, enrolled agent, somebody that can help you with your books, your tax preparer is going to give you a journal entry when they're done with your taxes, to put expenses on your books. One of the big things that tax preparers have to do in business taxes is reconcile book and tax differences. That's going to be one of the things, because mileage can be an expense for a business, whereas on the books you might not actually see it. So once you give your logs and at the end of the year your tax preparer prepares your tax return, you should ask for back journal entries to get your books in line.
Okay, perfect. Thank you. All right. And one more question. Coach just posted, should I do preparation, depreciation? Sorry. Should I do depreciation in my QuickBooks the same way it is done in my tax return so it match?
So as you go along, no. And there are reasons why your book depreciation may continue to be separate from your tax depreciation. For example, if you take bonus depreciation on something, that's not real depreciation, quote unquote, in the world of bookkeeping, and so you wouldn't want your asset to show zero value on your balance sheet for purposes of business loans and financials and financial reporting that's not tax returns. So you want to keep your book depreciation accurate. If it's a 5-year asset, depreciate it over 5 years, and ask your accountant for help with the journal entries to do that as well, if you're not keeping track of it as you go. So tax time is a good time to update your books for prior year depreciation.
Okay. Perfect. Thank you, Adam. So that's it. That's the last question. Anything that you want to add before we end?
No, I did. I saw one other question
Oh, sorry. Really?
about closing the books. It's a good question. Um, so QuickBooks offers you a if you have multiple users in your QuickBooks, if you have multiple employees that go into your QuickBooks and make changes, things like that, the close books um, function, which lives here in the advanced tab, is very useful. And one thing you can there's a log, an audit in your QuickBooks of who closed the books and on what date. And it also gives a warning if someone wants to go in and make a change to a part of the books that has already been closed. Um, and then you can also require a password to change something in a closed portion of the books, which is important too. Sometimes, like you just saw me do, I put in 2021 just because it's the end of the day and I forgot that it's 2023. So somebody might do that and put in a transaction that affects your books in a prior period. And without a warning or something like that, you wouldn't know necessarily because you're not pulling reports for that period. So it's a good idea to close your books. You don't have to, but it's a good idea.
Okay. Great answer. Sorry, did not notice that question though. But anything else? I don't see any more questions coming.
No, I just hope this is helpful for anybody, and yeah, I glad for everybody to be here, and thanks for having me.
Yes, definitely it is very helpful for everyone, even for me. Thank you so much for that, Adam. So if there's no more questions, then well, that covers our questions for today, and that's it for today's session. I want to thank you for attending. Our commitment is to help you reduce your taxes and increase your wealth. We do this with the Try Tax method, FDIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. All right. So if you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have our team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com and please join us a member today for $19.95 per month. Thank you all for attending and thank you, Adam, for helping us understand about the tax in QuickBooks. Have a great day.
Thanks. Take care.
Good night. Take care.